All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, June 28th. Couple more days before the end of the quarter and end of the first half of the year. Today, pretty much, I would call it a washout. Very tricky if you're holding any long positions. Energy did well today; it held up. Very odd again to kind of see this. The opposite of basically what we saw a little bit last week, but a couple things that stood out to me, which I'll get to. First things first, risk disclaimer, everything that we're going through is for information purposes only, not giving out any advice or recommendations, anything like that. So SPY finished down 2% for the day. Qs finished down 3% for the day. And it's even a little bit more drastic if you looked at where we opened. It was a green open. The markets did go higher for the first 15 minutes. And, it just this kind of day sums up what we've been experiencing all year long. It's just very tricky. I wish someone would have an explanation for this, but a big move up in the first 15 minutes. I guess if you're trying to put some type of explanation, there was some bad economics that came out at 10 o'clock, right? Consumer confidence lower than expected, but I don't know. It doesn't really explain that, how the market kind of reacted right around 10 o'clock. It seemed like a selling program, and then it just more and more selling. One thing that was particularly interesting to me was that the breadth was not very, it wasn't like heavy selling pressure. I look at what's called market. We have a breadth indicator, which looks at up volume versus down volume. And it just wasn't extreme at all today. So, here's a couple, the previous instances where we have seen this, and we can put in SPY just to see, but it just wasn't very extreme breadth to today. So I don't know. It could be just that that there's just no buyers. It doesn't make a lot of sense to me, but this market doesn't always have to make sense. And the fact that it's kind of like these days are a little bit predictable once you kind of get past the 12 o'clock hour, is that this market, whoever's selling, and who knows, maybe it's something like the Fed who's doing some selling, but whoever it is, algorithms, whoever's doing a lot of selling, it's like their mission is to get this market to close on the absolute lows, which is very odd to me. Now it is more of a bear market behavior to see this type of price action. But yeah, I mean, to say that there's no buyers at all in this market, nothing can kind of flip when you have down days like this. It's just a little bit odd to me. And the best thing I could say is to just try to, not be in it as much as possible. And so the other main points that I think are important here is that we've got a big inflation report coming on Thursday. That's the PCE deflator. If you've listened to the Fed, the last time that they spoke, which was in front of Congress, that is one of the key inflation gauges that they look at. They also do look at and I'm mentioning exactly what Powell said, but they look at the PCE deflator. They also look at the CPI report. I know the CPI report is very important to FinTwit. It's very important to the financial media, but the PCE deflator, which will get that data, and that's something that we talked about in our market observations newsletter that we put out on Sunday. But so what are we looking at here? Well, we're looking at, here's SPY over the last year. And this is when we've seen this bad market breadth, really nasty market breadth. And you could see that's been days where we have sold off pretty hard. So again, just interesting to see that we didn't really have that today. We didn't have a nasty breadth day today, but pretty nasty price action. So again, that could happen, but it's just a little bit odd. All right. So where does this leave us in terms of the technicals, right? That's the day. We're back outside of value. We were holding in there for just one day. Again, it's kind of comical how quickly that this market can move. We've had a little bit of digestion back here, and then we turned lower. And I would be mindful of that. I think this is the first break of that. if you want another line to say, hey, I'm still in this market and I'm not going to get, I'm looking for another level, I would watch this 3,800 level, right? That's the top of value. We are still above this trend. The 200 period moving average really helps to look at on the 1 hour chart. So we're still above that. But again, if we really start to, it's amazing that, a down move like this only gets us back in here. Now, we did say too in the weekend video that you might see a little bit of a pushback, right, after what we experienced on Friday, which was, heavy buying. So this would be a good place to kind of stop and hold. If we don't, then, then we could possibly retest the lows. Right, here's what it looks like for the Qs. I was thinking that the Qs could actually hold in here, but again, it just seems like this, whoever's doing this program type selling just wants to close on the absolute lows. So again, very, very odd, but it is what it is. 284.93 would be a level to retake. And if we kind of break here in the overnight session, then you just kind of know that, that was the end of this bear market bounce, right? And that's that. So again, how did I trade this market? I was holding positions coming into today, just out of things very quickly, right? So for example, and some things were actually like, I always try to take some profits, on some things in the beginning of the day. So I was able to do that. TMDX got my second target. ASHR, which I just decided to take off. Again, not a huge target because it tracks the Shanghai index, which ASHR, which just doesn't move that much. I actually, was looking for some new trades, like reopening trades. The travel names were very hot. I got out of that very quickly. I actually tried to put on an energy trade, just didn't like the looks of it, got out of it as well. ATHM, which is another China name, nice winner here, still holding a small portion of that. And that's it. And then I just kind of backed off, a couple other things like LYB. I was looking for the chemical names to possibly bounce a little bit because they've been so beaten up. Right, because I thought it might be a little bit more of a material type energy day today. That actually was maybe not the materials, but the energy did have a nice day today, up 2.7% today. But I did not get what I was looking for. I was looking at CC as well, which again was a very strong name. Back in here again, was just looking for maybe this to get somewhere into this portion, and that's being a little bit too cute, looking for a bounce and something like this. So that did not work. And again, it's frustrating when this type of thing happens, having to sell some names. And you could see I sold last piece of DQ, right? Still, again, nothing wrong with this. Even the last piece was, getting at it at 69, paid 69.32. I've really learned that you just can't stay in this trade. Can't stay in trades when you've got heavy selling pressure, or just downward price action like you had today, where it's going to close on the lows. There's no point in staying in trades that are going to get pushed lower. PLAB. This is another good example. I got out of this one right at my cost basis yesterday. What's the point of staying in something that is going to, get hit like this? Because again, this market's just not going to come back at the end of the day. They're just not, like I said, whoever's doing the program type selling in every single name, right, really wants to see this market close around the lows. So it's no sense in fighting it. It's better just to kind of get back to close to cash, which is basically where I am, and we'll see if these levels hold. It's also end of quarter can be tricky like this. There can be some type of rebalancing going on. I think the consensus was that there was going to be some pension buying. That may still very well be, but I don't know why. If maybe they're doing some pension selling. Bonds, by the way, I thought were going to be an issue for the day. They actually did come back, right? So for now we're holding this, even though we're still below the moving averages. So yeah, a little bit of it's not fun. It's not fun when you have to sell. I laugh because there's nothing that you could really do about it when you're trading. You just have to realize what the market is doing and then just get out of the way, right? And then the goal again is, I was down money today because I tried doing a little bit of day trading too, thinking that there might be a little bit of a bounce, which there wasn't. But it's best to just kind of to get out of the way and regroup. And the goal, if you're playing things to the long side, is to make sure that you're taking profits along the way, and that, hey, if you have a down day like I did today, some of the other days, where we did rally made up for it, and they did for me. But it's a big thing right now, while this market is having these bear market rallies, that again, and I'm not telling anybody what to do. I'm not giving out any advice or recommendations, but you have to be taking profits along the way. You can't sit and accumulate positions and think that we're going to like automatically go up, and also the continuing to kind of change your mind as the price action changes, right? I mean, my thought was that we could possibly get, and that still may very well be, right? We may find support in here, but I was thinking that we could kind of push a little bit further up into the 50-day moving average. And I thought this back here too. And I stayed in some trades a little bit too long with this, and this was decent selling pressure. All right, guys, that's it for today's video. Again, I think that really the economics that are going to have to come out, that are going to have to change things is when we get another inflation report. When do we get another inflation report? We get that on Thursday. PCE deflator, they're looking for 0.7. So if we get something like a 0.3, 0.4, right, where inflation didn't go up as much, this market could take off on that data point. If the market comes in, if the data comes in 0.9, 1%, right, we might actually take out the lows, right? Because really the Fed needs to see the inflation come down for them to take their foot off the accelerator of quantitative tightening, as well as raising interest rates. And again, the quantitative tightening, they're not selling bonds, they're just letting them roll off the balance sheet. But I guess what I'm referring to when I say QT or quantitative tightening is the interest rate hikes that they're going to be doing. We know that it's most likely going to be 75 basis points, but then the next meeting is a little bit of a question mark. All right, guys, so that's, I think, this price action may hinge on that Thursday report, and then we'll go from there. Have a good night, everybody.